In this presentation, we will continue on with part 3 of our example problem related to a hospital. We'll be recording the closing entries. In prior portions of this example problem, we've been recording transactions throughout the time period. Now we're at the end of the time period, and we'll be closing the closing entries, those end of the period closing process. Like with other for-profit types of organization, the closing process will be taking the temporary accounts and we'll be closing them out. We'll be doing this in our trial balance here. We'll have our trial balance worksheet. The trial balance worksheet is in order. This is basically the adjusted trial balance that we will be starting with the green accounts, the asset accounts, the orange accounts being the liability accounts, the blue accounts or the light blue accounts being similar to what would be the equity accounts in a for-profit type of organization. They here are going to be the net assets, and then the dark blue accounts, the ones we're concentrating on here, are going to be the similar to the income statement type of accounts, those temporary type of accounts, those accounts that would close out to what would be the equity section in a for-profit type of organization, closing out here to the net assets section. Now, it's going to be a fairly straightforward type of closing process. You'll recall our goal is going to be taking all of these income statement accounts, these temporary accounts, these measures of timing accounts, making them zero, closing the difference out then to what would be similar to the equity section or the net assets section. In a for-profit organization, you may have learned this with a 4-step process, closing out the revenue accounts to an income summary clearing account, then the expenses to an income clearing account, and then the income summary clearing account to either retained earnings for a corporation or the capital accounts for a sole proprietorship, and then closing out draws if it's a sole proprietor or a partnership, or dividends if it is a corporation. Here we're going to do everything in one journal entry, just recording the whole thing out, which you can do as well in a for-profit type of organization. So we got one big long journal entry that's just simply going to be closing out all of the temporary accounts. So we're just going to go down the line. We're going to say, hey, this one's got a credit balance in it. It's a patient service revenue. So we're going to go and build our journal entry and debit it. So you'll notice it's a long, ugly journal entry, but it's basically pretty straightforward if you think about it, right? We're going to go through it step by step. Then we have the $295,800 for the other revenues has a credit down here. We will debit it to make it go down to zero. We've got the $355,000 credit here. We will debit it to make it go down to zero. We've got the investment income with a credit. We will debit it to make it go down to zero. Then we're going to go to the expense items. We have the expenses all have debits in them, such as the contractual adjustment has a debit. We will then credit it to make it go down to zero. We see that the provision for bad debts has a debit in it. We will credit it, therefore, to make it go down to zero. We have the research expense with a debit in it. We will credit it, therefore, to make it go down to zero. We have the fiscal and administrative service has a debit in it. We will credit it to make it go down to zero. We have the general service expenses has a debit in it. We will credit it to make it go to zero. And then the nursing, the other professional services, and the depreciation, yes, I got a little tired of that, all have debits. We will then credit all of them. And then if we were to add up the debits and credits here, if we were to add up the debits, and then we were to add up the credits that we have thus far, and then subtract the two out, we would see that we would need a plug, a difference, something to make the debits equivalent to the credits of this $462,910. That will be the plug. That'll be the difference. You'll note that number should look familiar. Have we seen that number somewhere before? That's going to be basically the net income, similar type of net income type of number here, because we're closing this entire thing out, all the temporary accounts, revenue and expense accounts with one journal entry. Therefore, the difference will be the difference of kind of like the net income number, the $462,910. That's what we're going to close out to the net assets without donor restrictions section. All right, so let's post this out. Let's see what it looks like. We're going to say then that the patient service revenue will be posted here. It's going to make it go down to zero, which is what we wanted it to do. And then we've got the revenues and other, which is going to be making it go down to zero. We have the revenues from the grants and contributions, making it go down to zero. We've got the investment income, making it go down to zero. Then we have all the credits to all the expense accounts. So we credited the adjustment, making it go down to zero. We credited the provision for bad debts, making it go to zero. We credited the research, the fiscal and administrative, the general, the nursing, the other, and the depreciation, all with these items here, making them all go down to 0. And that's what we wanted. So we have all these at 0, and then the difference being posted to the net assets without donor restrictions has a credit balance in it. We debit it because in essence we had a loss rather than income. So it's a debit here, making it go down. So we made the net assets go down. Therefore, so if we have left with the post-closing trial balance, the post-closing trial balance only having our balance sheet account types within them, we have the assets, we have the liabilities, and we have, in essence, the net assets similar to the equity section. If you were to consider this, we would say the assets minus the liabilities will equal this $2,287,768. And if we were to add up all of these blue numbers together, that would also equal the $2,287,768.